We issued a VIX warning yesterday and this week in general, and it finally came to pass that the market did sell off based on that. The VIX was right, and we're looking at the red candles since 4 a.m. Haven't seen this many red candles in a row in a long time. Even during the pandemic, I looked back and I don't see a pattern that looks like this. Now, there's some similar patterns to this in July, but even during the pandemic, I haven't seen this sharp of a sell-off. One of the reasons this happens is because we go straight up for days on end instead of having a scenario where the market is, up one day and then down another, or up 2 days and down another, or up one, down one. It's based on the closing prices. Up 2 days, closes here. Up another day, closes here, and then down, closes here. We just have this, up every day. Let's go up every day, 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 and then finally, you get this sell-off. And so that's what we're seeing today. And you don't know. No one knows it's the beginning of something new. The market has a tendency to have more V patterns this day. We've talked about that recently. Nasdaq 25, bearish megaphone pattern. V patterns. Once it starts going in one direction, it tends to stay that direction for a long time, and you get these V patterns in the markets instead of waves. And so we're seeing this, and this could be the beginning of something new, or it could just be a short-term pullback because we haven't had one. And the market moves in these patterns. Let me show you where I think the market should really realistically look like. This is a weekly chart. Look how extreme this looks. If we go back to, going back, let's see how many, to 2010. Look at the extreme nature of the current market environment that we're in. So if you look at the extreme nature of the market environment we're in, you see, normal price patterns, volatility picks up. And as prices go higher, the bars are going to get larger on a basis of percentage range over close. That they have to point value, they have to get bigger. But this is really extreme. We see this acceleration in the Nasdaq, and then pandemic, what you would expect. But this pandemic didn't even take out this 2018 low in the pandemic, and then Fed stimulus comes in and wham. I mean, that's extreme. So, I mean, if it continues on the same path, the market ought to look more like, if you're drawing a trend line in this market, this is the trend line. And so it's just kind of gone wild around this trend line. And so if it pulled back to this trend line, that would be kind of normal. It would be a pretty big percentage pullback. So if it took in a 20% pullback, the market might be considered a bear market, but it's still in this longer-term trend line. I'm drawing this, rather crude trend line here, but that is the path of the market, and I think the market has to come back to that path. It can't continue to accelerate in the way it is. And so let's look at the VIX as well. It's up above 30, and we talked about this. The trend was down for a long time in the VIX, and so, wrong one. I want to get the pen out. I use pink. Pink's not my favorite color, but it's easier to see than some of the other colors on this screen. And so you see this downtrend overall with some small spikes. We had a spike here. It got crushed last Friday, and business as usual. But creeping up here to last week's highs, and then it accelerates. It accelerates as the Nasdaq sells off, and so a lot of red candles on the Nasdaq, a lot of green candles on the VIX, and the trend is now higher in the short term. And the trend is higher in the VIX as it goes above 30. And so we'll see if this is the beginning of something new. And oftentimes it is in this type of market environment. As we roll into the election, we will see this. A lot of the Nasdaq stocks that were so hot have split this week, in the past week, and so is at the end of the run. We will see. Let's look at the top winner on the day overall. We're down a little bit on the day, depending on which portfolio you're in. Up a lot of ups and downs. Some short trades are bringing us back. We had a lot of long trades that we had that were stopped out at the beginning of the day. Now we have some short trades that are working well. Let me show you those. So gap continuation 2019 is in the micro stock index and micro gold portfolio. It is a quintessential example of cutting your losses short, letting your profits run. It's had, see, 1, 2, 3 losers here, 2 losers there, 5, and then yesterday There was 3 more, so 8 losers in a row. As we saw that, minus 975, minus 650, minus 975. Today it's up 4,000. It was up as high as 5,000 at its peak. It lets the profits run. It's hard to do. It's hard to take all these consecutive losers, and it's hard not to want to get out, at that low, or at this low, or at this low. You think, I should have got out there. Gap continuation 2020 did not take this trade. It is flat today. There was too much volatility, so it did not take this trade. But gap continuation 2019 did. It's up 4,000 on the day. We will see where this ends. It could reverse and get stopped out, which makes it hard. You could almost go back and say, for psychological satisfaction, I want to trade 2 contracts of this, and I want to put a $3,000 to $5,000 profit target on one contract, and then I'll let the other one run. So you're in a situation. A lot of people do that, even though the long-term results show better. It's better not to put a profit target on this. Psychological satisfaction of doing so helps some traders stay with a strategy and stay with it. So that's one of the highlights of the day. Overall, we're down a little bit on the day, depending on which portfolio you're in. The 25K portfolio has 2 losses on the day. The others are mixed. A lot of SR counter trends that tried to buy this pullback were stopped out. We talked about how, here's the SR counter trend to E-mini S&P. It went 8 for 9 in August, and we talked about how strong this market was and how we just keep buying the dip till it doesn't work. Today, a lot of SR counter trends tried to buy the dip. It did not work, and so there was some give back. And so it's the best way I know how to trade, because I'm not a prophet. I can't predict the high, the long-term high. I look at long-term scenarios. I look at extreme scenarios on both the upside and the downside. But I don't know. I don't know when the trend will end. And so we stay with the strategy, and then when it rolls over, we give some back, and then we have some strategies that start shorting. So that is the update so far. Intraday, midday, open positions. And I'm showing actually right now, as of 12:43 Eastern Standard Time, the stock index gold portfolio is right around break even based on the current position.